All right, what's good, everybody? How's everybody doing on this fantastic Thursday morning? We're gonna take this time to reflect on the fact that GDP came in with a massive miss. I mean, it's not a small miss either. It's down almost a whole percent of what was expected. We had a 2.5% expected. Now, this number will be revised probably two or three times, so this won't be the number this probably won't be the number that stays, but it is definitely going to be the number that the Fed has to base their decision off of. Simply meaning we have 1.6, that's almost a full percent drop from what was expected. And on inflation, we had a higher print. So lower GDP, higher inflation. Starting to hear people on the Talking Heads networks talk about stagflation. Yeah, but we'll see. We get PCE tomorrow morning. That's also another inflationary measure. We'll check it and see what it's doing. I took a short trade yesterday on the S&P 500 simply because it was retesting monthly supply, actually rejected up there. So this is what I want to. This is like something I wanted to talk about simply. Um, Now we came in and we tested that level to perfection. This isn't the time to take the trade. The time to take the trade is to wait and see how the market reacts. And I want you to see that when we first tested it, that was, and literally that's when the trade was to be taken. Simply put, I wasn't just watching monthly supply. Obviously, I was watching the intraday support and structure here, and we were testing resistance, which would have been here. That was set in at 7 a.m. So I essentially waited for this candle to start dropping back down. That's when I initiated the put, and you can see that here. All right. I initiated the put right there. And then that meant I could stick a stop up there. You see what I'm saying? I didn't have to put the stop just right here. I could put it all the way up there. And, it didn't look like the trade was going to work out. Obviously, throughout the day, it looked fantastic. But then, we get to the 10 o'clock hour and it's like right back up to my entry. And generally, I will close those positions out. But we were still unable to close even a 5-minute candle above that exact price. So I just left the position on, and I'm glad I did. We had GDP coming up this morning. GDP came in as a huge miss. So the S&P 500 is taking this not so good. We have the DXY was literally testing daily support not too long ago. Today, I mean, it was trading around this area in here when we actually got the GDP print. You can see how that has totally changed the structure of the daily candle. Now, it doesn't necessarily mean it's going to stay up there. At 9:30, the market could open and the price could roll right back over again. It just matters how these candles close and all that. So I just wanted to keep because I think a lot of people, they're kind of like they're misinterpreting things and they're doing things not to the correct way. Literally, we were testing daily support, so people that I got a couple people, or at least one person in the Discord that said he took a short on Euro USD. I told him to just be careful because DXY was testing and trading down around that daily support level. So if it breaks down, then this is going to continue to go up. But the GDP came in as a miss along with some other numbers, and it sent it straight down. So that good trade on that part. Obviously, we are looking for downside continuation. We had a few days of pullback, which is what we want to typically look for. You can see here, this is your old support low. Or not support low, but it is old support. That's a swing low. Markets come back in, break down, come back in for a retest right there. I mean, that's what he was basing this trade off of. Good on him. And now he's setting pretty, and hopefully it'll continue to go lower. On the pound, we got this. It almost got up to daily supply, not quite, and then rolled over. It just immediately shot down. Like I said, GDP came out and it just screwed basically everything's momentum. The pound actually had a pretty big day. It was up like almost 50% on the day at that point in time. So yeah, Everything is going according to plan. Bitcoin made another lower high here. It still has not made a lower low. This is going to be the low that I base that off of because that's the low. That's the lowest low, and it's last month's low. All right. So if I put this down here, you can see last month's low is literally the lowest low in this consolidation candle. It is, as of right now, still a consolidation candle, whereas the difference is here. You can see that we tested monthly supply on the S&P 500. So the S&P 500 is printing a bearish monthly candle with 5 days left on the close. We'll see how the candle closes out. And I'm not looking for a massive pullback or anything. A lot of the reason why it's just pulling back because it has literally been on an upside tear without giving any pullbacks or anything like that. And you can have engulfing monthlies that don't turn out to be much. This is a pretty bad example because it actually was the last leg down in the bear market. But I don't think we're going to start a new, or actually it did start the bear market. I don't think we're going to start a bear market or anything like that. I do think that, if the PCE comes in high, any chances of a rate cut are probably going to go out the window. And I wouldn't doubt it if they don't start talking about actually needing to hike rates again. Obviously, that's going to have a small impact. I do not believe it's going to cause a bear market. With that being said, if inflation begins to skyrocket, if inflation, that's going to be the most important number to look at. If it starts to skyrocket again, then I would say, yeah, there's a potential for another bear market. You can simply watch that chart. You don't even have to watch the news for it. You can just put it in. I have it right here. Here it is, USIRR. That is your inflation number. You got to get it off log. This is the CPI number. This is what they're keeping their eyes on. Essentially, this and a few other metrics. They don't like this metric because this metric uses gas and stuff like that, oil and food. But still, this is the number. You can see where it started that massive climb, and the market's basically rolled over. Right. Once we hit this 9.1 number up here and started to drop, that's where our bull market of 2023 thesis came in. Essentially, I was saying, and like at the end of the year, if inflation continues to roll over, then risk markets will come back in with a bid. It's the inflation. That's what scares investors in and out of their positions. So just keep an eye on that. It doesn't look bad, obviously, where it is right now. But the yields aren't looking good. I mean, we got a big spike on yields here. You can see we're getting right back up there into those very high numbers. Today's gotten a nice big bullish pop. This means that bonds are getting absolutely wrecked again. Here it is right there. And then the 2-year is going to be important as you're already back above 5%, which, that's not really great. Obviously, at 5%, 2-year isn't what people want to see. They want to see this thing roll back over. They want to see the bond market start to rally, and they want inflation to continue lower. Now, obviously, that position was a good position, so I'm going to close it out real fast. Just bear with me here. I'll do it. We'll do it live. So that way you guys know that it is actually a position. I don't know why it shows that it's red. Oh, okay. It's just going down. Never mind. So there's the put right there. It was a 37-day out, 51.20 put. Literally it was right in the money. Right in the money when I took the position. We'll go down and look at the table. So essentially when I took the position, it was right here, right? So this orange line was all the way up here. And that's when I took the position, and now it's nicely in the money, so we can go ahead and jump out of that. Try to get filled on the midpoint, as always, because these are a little spready. But there you go. That's also going to put the P&L back up 2%. 2%, 2%, 2%. So it was down massively on the year, now it's up. So we'll see if I can continue with this progress. I'm pretty sure I will. Like I said, we're just starting Q2 2024. There's no rush. We're going to be just fine. Everything is going to work out. So let's go back over here to the on watch. Backed over here to Bitcoin. As you can see, it's just down 1.86%. So it's not taking a massive beating comparative to the S&P. The S&P is down almost 1%. It could be down 1% when we have the SPX open. We'll see. There's that fill. So good. I'm out of that. All right. So last week we had this big move, right? It was $100 expected move. We ended up closing 50 points lower than that. So we had a 150-point move on the S&Ps last week. So that meant this week's move was going to be a little bit smaller. I think the expected move was around $95. So you can see how we were basically trading up near the top edge of the expected move. I used that into my, into my thinking as well. I'm thinking to myself, well, if we are going to see continuation to the downside, this would be a good spot to put on a put. Right? Maybe buy a put or either sell a call. And since, the amount of money that you can make is guaranteed, like topped out when you sell calls, when you sell or buy a put or buy a call, when you're long options, there's almost an infinite amount of money that you can make. Not on the downside, obviously, because things can only collapse 100%, but to the upside for sure, there is an unlimited amount of money that you can make on a long call. So that trade is closed. I am looking to get myself into other trades. I generally don't want to do my trades on the S&Ps because, they're kind of methodical. And now that we have rolled over a little bit, I do expect us to have some back and forth trades, some downside and upside moves, which is fantastic for traders. All right. It's a fantastic thing when the markets aren't going just in one direction, especially when you're massively overbought on the weekly. It's hard to get long up here. Am I right? Like if you just look at the RSI, you've been overbought for a long freaking time. It's hard to buy up in there, but you can't really short it either. Like you need that first initial move. This was also the first time in 2024 that we did close outside of the expected move on the weekly closing basis. All right. That's the first time all year that you closed a weekly under the weekly expected move. So pretty good volatility last week. VIX has, though, potentially topped out for now. We'll see. I don't know. We do got earnings coming up on a lot of big tech. This new pop-out window is absolutely driving me freaking bonkers, dude. I hate when TradingView does these updates and then they completely change it up. Like, I like it better when it was over here and I'd scroll that way. This has got me all discombobulated. What was I even going to look at? Let me see here. Let me think. What was I saying? The VIX is going to be coming down a little bit. Yeah. Also, we had an elevated VIX. That was another reason to take a short position. But I want to see two-sided trade nonetheless. Oh, Magnificent Seven earnings. Here we go. So Meta had earnings last night. Boom. Not doing so good. Yeah, he likes to spend money. Companies like it when you make money, not spend money. So pretty good size move to the downside there. It's down almost 12% pre-market. But it's up almost, it was up almost 50%. Well, it was up 51% from the year to date, up to all-time highs. So it's a significant drop, but you still have this gap. I don't know if you'll see continuation to the downside today or not. I'd say you'll probably actually get a bounce. I mean, a 12% move on an asset, it could spark new buyers. But with the GDP and everything, today and tomorrow, I'm not expecting any massive moves. I love it when things start to give me that two-sided trade. It gives an opportunity to get long or to get short, judging how the macro view looks out there. I mean, as of right now, that GDP miss is going to be kind of big, and we could see some continuation lower on it through the S&Ps and the Qs. All of them are getting absolutely wrecked this morning. Qs are almost back down to the lows of last week. Nope. Yeah, so you can see here's last week's. Let me get rid of these. Last week, that's Friday's close right there. Here we are trading pre-market. So we're right back in Friday's range since, yeah, coming back. Not really a big bounce there. I was expecting a little bit bigger of a bounce. I did sell puts. I did get caught twice before. So the P&L got back up into the profit on the small account, and then damn. And then it dropped again because I got a little bit too early on my positions. But, I've taken a couple good trades since then, so it's up. It's doing okay. Let me go look at these charts real quick. So, yeah, the SPY is going to be opening right here around under $500. Once again, you can see we did hit that expected move to the upside as well as that monthly supply level. So pretty good spot to look for downside continuation if there is going to be downside continuation. Remember, we're traders, we're not fortune tellers. We don't know what price is going to do ever. So we have to, we have to look for these areas, specific areas to take our chances. And if you're going to do technical analysis to do that, then you need to do it the way that we do it. It's I know it's hard for people to take those entries or wait or be patient and this and that, but it's just what you have to do in a market like this, right? There's a lot of firms out there that are struggling this year because they just either read the macro picture wrong, or nobody expected the markets to fly as high as they did, right? Nobody was expecting Bitcoin to make fresh all-time highs before the freaking halving, but it did, right? It absolutely did. So we've had the halving. It was on the 19th of April. So right here on this day, there was a little bit of volatility that day, right? I mean, that's a pretty nice move back to the upside on Bitcoin, but ultimately it's just made a lower low, and it's dropped down here, back down to the $63,000 area. So we're kind of watching last month's low. Ultimately, if we take that low out, you will have lower highs and lower lows, and you will have a lower low on a monthly time frame as well. Like I said, there's 5 days for that to happen. I'm not necessarily expecting us to break that low or anything. In fact, I would rather see us stay range bound for a while doing something like that, right? Because that's the way to make that's the best way to make money, in my opinion. When you got, bullish moves and then bearish moves, there's so many different ways that you can turn that into some nice gains. Excuse me. But yeah, that's what we're looking at right now. So we don't have a potential top yet. You need to take out that monthly low before you can say that you do potentially have a top. But remember, with the having happening, as long as risk markets can stay bullish, what did we open up? Yeah, we opened up down 1.4% on the SPX. So we're heading right back down towards Friday's range again, which isn't really good. But you got to take profits when you have them, right? Always take profits, guys. Don't set in a position and hope for continuation. That's what usually gets people wrecked. Also, I always take profits. If I'm up more than 1%, 2%, I'm taking profits, right? So yeah, do that. Always, always, always. You can always re-enter a position. You can always take a new trade. So just please take profits. But that was a fantastic little rollover there, and I capitalized on it. So we'll see if we can find some support down here. If it does come back down to Friday's close, that would be where right there's that blue line, and that was 49.6724 on this thing, right? On the S&P 500 index. So you can't buy shares on this. This is only traded by options. But it generally follows the ES futures contracts. And that position was in a futures contract. It was in the micros. Remember, small account. I can't trade the E-minis yet with this account, but it will eventually be able to. And then that's when the money will start rolling in. But yeah, Tesla's still down. It did have earnings. It did get a pop, but year to date, I mean, this thing is getting killed. It's getting down to the point to where, like, I was saying around 150, probably people would start to look to buy it again. It does look like they did beat on earnings. They are looking to bring in a cheaper car and as near as next year. However, Tesla is one of the biggest companies in the world for missing targets, missing dates. The Cybertruck was supposed to be out already, I'm pretty damn sure. So, yeah, I wouldn't get my hopes up for a cheaper, smaller car from Tesla in 2025, but it could be possible. I'm not saying they can't do it. They've grown a lot in the last 5 years, so they may be able to pull it off, but obviously they didn't beat on earnings, but investors just stepped in there. Now, I don't know if that's going to be the ultimate low or not. We'll have to wait and see. But I mean, buying a few shares of Tesla in this area still might not be a bad idea, right? I mean, you've gotten a hell of a pullback from the 2024 yearly open. A hell of a pullback. And people are going to rotate into things that they think's going to make money in the future. Obviously, Tesla's a good company. They're still down 35% on the year. So you could buy, one or two shares for the longer term portfolio. Just put them aside. Don't worry about them. Don't check it every day. Remember, it's for long-term growth. I very rarely ever open up my long-term portfolio. Unless it's to buy or, take a position off or whatever. But yeah, so that's that. USD getting that bounce. Once again, the risk market's down. Okay, let's talk about the USD JPY for a second because the BOJ does have a meeting tonight. So it'll happen, I don't know, really late for me. So I won't see anything until tomorrow. If you want to try to take a shot at this thing, just please understand, even if they do rate hikes, and even if they do mention something about, stepping in and trying to slow the descent of their currency, I don't know if I would try to short it. It's still a very, very attractive long trade based on the carry. So remember that. They're still down much more than we are. We're at a 5% interest rate or 5.5% interest rate, and they're at zero. There's zero interest rates, or maybe they raised once. I can't remember, but I know that if they did raise, it ain't by much. They typically run a zero interest rate policy, or negative even in some cases, or for a long time. So that, just that interest rate differential is good enough for people to just buy this and hold it because, well, there's a 5% interest rate differential there. So be careful on that. But I think if they do intervene, you're going to see some pretty tremendous move in this. And if it does happen, then you can look for opportunities. Just keep your risk at 1% because this thing can really move, especially if it does anything like it did back in 2022, which was a fantastic trade. So we'll keep our eyes on it. Dollar strong, yen's weak. So as long as the dollar's strong and the yen is weak, it's not really a good short. But it could be ultimately if they come out and say, yeah, we're going to raise interest rates by a whole basis point, and then we're going to start selling some dollars and trying to prop our currency up, that could cause some downside. But I wouldn't be trying to get in front of that because you could see a really volatile move to the upside still on the USD JPY just to liquidate all those early shorts, right? And the miss on GDP is ultimately bullish for the dollar. You can see the dollar just looks like a standard bull flag. I mean, you got your move up, few days of pullback, move up, few days of pullback. We'll see if it can move up again. It does look like people are buying it. And then once again, the poor TLT getting absolutely wrecked, gapping down below support here. So I don't know about this thing, man. I don't know. As long as those yields keep rising, this is going to keep going lower and lower and lower. I figure it will eventually find support. I hope it does, because anybody that doesn't have any risk in their body, right? They got their 401ks in bonds, right? Because those are usually the safe asset to be in. They just haven't been for the last 3 years. They gotten wrecked. Good morning, everybody. Good morning. Good morning, Mr. Bill. Good morning, Flo. Brian, greetings from Amsterdam. Keep up the good work. Thank you. Yeah, last time I was live, we had a technical difficulty. One of my J5 creates took a dump, so it closed off my internet antenna as well as 2 monitors. But I switched them around and it works fine for now. So we'll keep going as long as we can. I will try to answer as many questions as I can before anything happens or before we end the live stream. But that's basically all I'm looking at right now. Like I said, as long as we're getting a two-sided trade, I'm going to be probably focusing more on stuff like IWM, the Qs and the SPY, or futures contracts on the micro ES minis, or they're not minis, they're micros. Euro dollar looking like it's trying to find a low here. It took out yesterday's low. Looks like it took out yesterday's low, or did it? Not quite. It does look like it took out yesterday's low on the big screen, but here it did not. So that's probably a good spot to take profits for anybody who did jump into Euro USD short this morning, for sure. I mean, you can't ask for a better move, right? You completely retrace the whole daily range. And if you're looking to day trade, that's generally all you're looking for. You're not looking for huge moves lower. Take your profits, move your stop to break even, and then leave a small piece on for any downside continuation. But we'll see how that works out. The pound does look like it's trying to go back down to the lows. It did consolidate for a very long time up here, and we have broken down out of that range, and we have gotten some continuation. I mean, it was almost a good short, but I was focused on that dollar and knowing GDP was coming out. If they would have hit, like if it would have came in line at 2.5 or higher, the dollar would have got crushed. And then the pound and the euro would have continued up, right? That's what I was kind of concerned with. I did not have any reason to think that we were going to see a big miss like that, which was fine for me because I was short, but I did have a cutoff point on that for GDP just in case it did come in. Let's go look at everybody. Other favorite thing to trade within Bitcoin would be Mara. It is starting to get a little bit of a bounce here. You're just in a longer term range. You get the monthly pulled up here. So this is going to be your breakout candle right there. That's the last month of last year. So essentially what you're testing or trying to hold here would be monthly support. The problem is with the halving, it makes it more difficult for these things to make money. So to be honest with you, this is probably going to be a sell on this. Yeah, it's right around that 50. So yeah, if we can get a pullback up to 1943, I might not buy a put, but I might sell a call if I can get that. Let's go look at it real fast and see what the implied volatility is on it. Oh, we got earnings coming up really soon, so I would probably just do like 8 days out let's see, where can we get, if we go out 8 days? So not really a whole lot. I mean, there's a lot of implied volatility baked into this, but not a lot of premium. Because if Bitcoin, I mean, you're only looking at $2, $2 or $3 there, and we know that Mara can move a lot more than $2 or $3 in a day easily. So there's not really a whole lot of premium to sell there. With earnings coming up, I definitely would probably not be selling any premium longer than 8 days out. And if you do sell premium, just make sure you keep on track. The 1 day or for tomorrow, there's literally not enough premium to risk on it. And I just can't buy puts when you're at 133% implied volatility, because you're just going to get killed. Even if you pick the right direction. If you wanted to try to like YOLO a put, if you think it's going to roll over today or tomorrow, you can see the puts are a little bit more expensive than the calls are at the money. So at the money, the puts are 65 cents, whereas the at the money call is 40. So it does look like more people are jumping into puts than calls for right now. So yeah, you could do a YOLO play on it. Maybe grab one of these right here. It'll expire worthless tomorrow if you're not in the money. Man, I hate this freaking thing. Wish it would stop. All right, there we go. So yeah, we'll see if it finds resistance or not, as it did make a fresh low. So you do have lower highs and lower lows, but earnings is just too close. I don't like to trade things when earnings is real close, because it makes it 100% gamble, right? Your price action isn't going to behave normally when earnings is around the corner. Good morning, stocks and technicals. What's going on, my friend? Michelle, what are you doing? How you doing, Ram Mountains? Good morning, my friend. Great to be here. Good mornings. Awesome. So does anybody have any questions at all? Any questions? Any stocks that you're looking at that you think there's a setup on? Anything at all? Just let me know. Basically, all I do, like, if I try to run scanners, if I don't see anything on a scanner, then I'll just run through the entire S&P 500 and just look for a potential setup. I know that Carnival Cruise Lines just, what's their ticker? Gold. Yeah, let's go look at gold. Let me see if I can find Carnival real quick. I just can't remember their ticker symbol. It's C something. Let me just type it in here. There it is, CCL. They said that they're actually seeing really good growth. They don't even have earnings, so I don't know why Bloomberg was even talking about them this morning. But ticket sales are at all-time highs. So you would think that would actually help the stock. It really isn't, though. So yeah. We'll have to see about that. Retail, Walmart looks okay. It's trading in a range here. This is going to be weekly support down here. That's basically what stopped it from there. So yeah, it's trading in a range. I don't remember what this is. That top line. All right, so there's going to be weekly res there, weekly supply there. We'll keep watch on weekly supply. But this just looks like a bull flag to me. So, I mean, yeah. If it breaks out and start making fresh all-time highs, then you might be able to take a trade up to $64 on Walmart. Let's go look at gold real quick. Gold was a great trade, but that trade is done, in my opinion. I already took profits on it. It's got a nice pullback here. This is such a pretty big gain and a pretty big breakout, and it did last for a significant amount of time. So you're probably going to see some consolidation at best, some two-sided choppy trade here like that. I would not be trying to short gold, not right now with inflation potentially continuing to go higher. That's why you have broken out, essentially. Watch PCE tomorrow, see if it, is it lower or higher than last month? If it's higher than last month, then gold would probably be a buy from here. I would probably not buy it there though. I would watch this area right here, as that's your old area of potential resistance. Then there's the breakout. So it's already been retested once. So PCE might be a good trade for on gold tomorrow, depending on if it's higher or lower. If it's lower, I would say gold will probably pull back a little bit further. But ultimately, I mean, it's starting to trend. It's broken out, which is good. There's your old all-time high, new all-time high, and then there. So yeah, you've been trending to the upside for 2 months. But I mean, it can continue to trend, right? But these are pretty good size candles here. One might even just watch the open of this month's candle. That might be a good spot to look for potential support on gold. And that's going to be 22.33, 120. XLE longs, long energy. Oil struggling at monthly supply. Remember, energy it has a lot to do with the companies that are involved in the oil business, not necessarily oil itself. But when oil prices are moving up, then generally your oil companies that make up the energy sector will go up as well. I don't know if I like it long from this point exactly, because I mean, it looks similar to the S&P 500. You had a nice week of pullback, this move higher, and it does look like it may be finding resistance there at around 96.19. You have made a couple subtle higher closes, but nothing to write home about. So just be careful on getting long right here, right now. You've already tested the 50. That would have been the spot to get long for the bounce. Maybe if you can continue to close dailies above the 21, then you could potentially look for longs on oil. The oil trade, for the Middle East is a little bit wonky. Remember, there is an election this year, and they can control the price of oil. If they want oil cheaper, they can make it cheaper. Trust me. And that would hurt the XLE. XLF is another one that had a nice move lower. Then we got a pretty decent sized bounce out of it. It's going down a little bit today, but these two, XLE and XLF, is what's got me a little bit concerned for any downside continuation. Those are two big ones. So as long as tech is going to continue to pull back here, which it probably will, as it was very extended for a very long time, then that could mean that they're going to rotate out of. This is actually probably a good place to look to start buying more tech. I would watch 189.86 to see if the access support. If it does, I would probably wouldn't mind throwing on a call there. But I got to see closes above, right? I don't want anybody buying calls on this at 171 and say, well, you said to go long, because no. As long as daily closes are above 189.86, then potentially you could look to go long. But if they continue to rotate out of this and into something like that and XLE, then yeah, tech's going to continue to come off. But they have a lot of companies are doing their earnings. Let's go see when the earnings are. So we got Microsoft earnings today. Could we do like a YOLO on Microsoft? Oh, I wrote it backwards. MSFT. A YOLO. Damn. Implied volatility is 77%. So it's well above where I'd want it to be. And they're very expensive, so never mind. There's no YOLO to be had on Microsoft. And we can't build a spread either because implied volatility is going down as the strikes move higher. That means, so like, if you see this, I've said it a million times, if the implied volatility is going down as the strikes go up, then you can't put a spread on. And the reason for it is simple. All right, so these are $2.50 wide strikes. So just to do a $5 wide spread, I wouldn't do it today, but you can see we got to go up one more. Boom. So the amount that you're paying is just barely cheaper than your max profit. Remember, $5 wide spreads, you want this number to be cheaper than $1.70. $1.50 even, right? Because then that puts your potential profit max at $3.50. So you try to get that 2-to-1 risk to reward on it. It's still just a 50% because you're directionally biased, but it can help you by putting spreads on because the trade moves slower. But they're still very expensive. I mean, if you can risk $555 on a YOLO play, go ahead. That's too rich for my bones. But a lot of stuff is still going to do that. So Brian is looking for a potential call spread on the XLE. Probably isn't just going to buy calls. So go out over 30 days, check the implied vol. Is it going up or is it going down? It's going down, right? I know that's confusing, but you want this number to go up as the strikes go up, right? Because you're buying the expensive one and you're selling the cheap one. So it makes the spread not good. You want to see these numbers climb. You want to see the IV climb as the strikes climb. See, normally this is what it looks like. Like on Thinkorswim, you can't change the direction. So this is generally what it looks like for people. On the call side, your numbers get higher as it goes lower. I like it this way. I like the numbers to go higher as it goes up. So that way I can just briefly look over here and I can see that at the money's at 21.10% and then out of the money is lower. So that means a $5 wide spread or a $2 wide spread or any kind of spread on this will not work. That means you're going to pay more than you could potentially make. And I don't like to do that. But the IV is such where you could potentially sell. Like you could sell puts if you wanted to take a bullish position on it. Wow, one standard deviation, there is a lot more premium on the one standard deviation on the call side than there are on the put side. So that does indicate that there's more higher interest, or, a lot more people are either selling or buying calls. Open interest is what I was trying to say. Volume and open interest is generally higher on the call side when the implied volatility goes up like that. It's so weird. So right at the edge of the expected move, you're looking at about $96. And on the bottom edge of the expected move, you're at 68. So there's quite a bit of difference there. So yeah, I mean, you could try to get long here. If you were gonna do it, I would just buy an outright call, Brian. I wouldn't do it. I wouldn't do a spread trade, bro. It's cheap enough. The options are cheap enough on that to where you could manage risk easily. And you know how to manage risk, so you should be fine. Just watch that 21 exponential. See if it can continue to close above that, and then boom, hit it. Can we look at POET? POET. Okay. Wow. It's moving up. Is it on the fire list today? No. It should be. Why isn't it? Oh, it's because all right, it goes from day to day. Sorry. My brain was chalked. Yeah, it was a 25% move yesterday, but you're down on the day. I don't know what this is. Obviously, it's moved quite a bit in the last 3 days. I don't like this kind of chart. You got monthly res up there. I don't even know if you get up there, to be honest with you. There's a swing low, swing low. So it looks like it tagged this right here, Michelle. There's your lowest weekly close. And that's essentially what you've hit right there. So generally what happens to these things is they just run out of sellers. And then they get big spikes like this, and then people that own it from like 388, they're like, the hell with it, I'll get out now. And that's what causes these, very cheap stocks to get those huge pops. But 90% of the time they get sold back into. If there's some kind of news or something on it, I mean, you could potentially look to buy it, but it's going down pretty hard today, and there's not really anything I can say other than it's a midpoint check right now, and that's all you got of yesterday's candle. But it opened right on that weekly swing, that weekly support. It opened right at that price, and then beep. So intraday is going to look like that. It did look like it did have a lot of move up yesterday. This being pretty much a penny stock. Anything under $5 is considered a penny stock. These things can make you a lot of money quickly if you're able to get in and out. But right now, the sellers are definitely in control. Let's see where the majority of the volume is on today's range. Wow. It looks like a lot of people pre-market got long. So that's gonna put sell side pressure on the asset. I know it doesn't make sense, right? You see this huge spike of buyers up here at 260, and you're like, why is it going down? Why wouldn't this act as support? Well, the answer is very simple. These people are stuck. All these people that bought at this price, they're stuck now. They're in a losing position. So depending on where their stops were, that's what's putting the pressure on it. The sell side pressure is all the people that are stuck long. I don't think I would mess with it today. Now, if you can get a big yellow bar down here intraday, and then this switches from up here to down here, then maybe support's trying to kick in. But as long as you got that big vibe volume up there stuck like that, I don't know if I'd mess with it. Especially with a big position. Because, a 10-cent move is a big move when you have 1,000 shares or something. And when you get cheap stocks like this, that's generally the idea, right? For penny stocks, because they can continue to go up. There's nothing on the fire list today. Like the biggest stock is up 40%. And this is also a cheap stock. This isn't the best scanner to use either for penny stock trading, because then you won't get those ones that pop up real quick. People are looking for like a 5 or a 10% move in less than a minute. And then they'll jump over there and then they'll just buy it and hope it continues. But as of right now, this is the trade of the day, if you will. And it's definitely a low volume stock. So there's more volume today. It's even leading in the volume department. So a lot of people are jumping on this, trying to sell it and go long at the same time. A lot of firms are built on selling these penny stocks, whereas some firms are built on buying them. But I used to trade them a lot, but they're very difficult to manage risk, because I've seen a 1 second candle freaking drop, $20 or 20 cents, 30 cents. And if you're using big size to try to, just capitalize on very small moves, then you're going to be hurting huge. Yeah, that 1 minute candle right there went from 265 all the way down to 235. That's a 30-cent move in 1 minute. Would I buy it to own it? The answer is no. I wouldn't. I don't know what it is, if it's got news or whatever, but these charts, I just don't like them. Watch the midpoint of yesterday's range. If you start closing 5-minute candles below it, Michelle, I'd leave it alone. If you're trying to day trade it, just fib out yesterday's range, low to high, and then just watch this area right there. If you lose that, then you're probably going lower. Long-term gains on it. Yeah, it looks like it got news a couple days ago, but The technicals are saying buy. What the hell? What metrics? Analyst rating, strong buy. So something's happened here, I guess. And what analyst? Based on one analyst. One. It could literally be anybody. At $3. So they, even them, a strong buy here, they're only looking for it to get to $3. Ask yourself that question. I mean, do you really want to trust this thing? Because you know it can go right back to $1 easy. It looks like it's being defended at $1. So maybe buy it at $1 if it gets back there. I generally don't mess around with them anymore. It's a semiconductor. Got it. Got you. Yeah, I mean, only one analyst is talking about this. I don't know the analyst. Wheat. I don't want to just type in wheat. I want to actually get the ticker symbol. ZW. So it's going to be ZW1 exclamation point. What happened? There we go. Oof. Internet's chalked. It's had a few strong days. Wheat futures are expensive. It's had a good week. That's about all I can say for it. I mean, overall it's been getting pounded. I don't know if I would do anything with this. It's already had a big run up. Would I sell it? I don't know if I'd sell it either because it's overbought on the daily. Like down in here is where I would have been looking for the short setup on it, and obviously it would have, it would have been a decent setup, but I wouldn't have taken it because it would have broke resistance and closed above it. It just would have been a difficult trade. Unless you got some insider information about wheat, I wouldn't be messing around with it. You can get killed in futures. Overall, it doesn't look good. But I mean, has it found a bottom? That's probably what you're asking yourself. It's possible, but like the thing with futures is they're so volatile. Very, very volatile. You can see, I mean, this is a huge move right there in the span of a couple months. There's too many bullish daily closes there. I'd have to go up a time frame and check it. So there is no resistance there. I mean, is it a double bottom? It's possible. But it's just been getting absolutely slaughtered since 2022. It does look like it, to be fair, it does look like it is trying to base out. I mean, that's where I would have been a buyer. And you had the perfect opportunity to buy it. It gave you many, many days to be a buyer at this price before it ultimately ran. And it's not tagging any major level for me to short it either. So that's going to be that monthly res up there. So I couldn't even look for shorts on it until it got there, but this doesn't look great. It does have double bottom vibes to it, but I think you missed the move. If it gets up to 628 by 6, then maybe you could watch that for potential shorts, but I mean, just be careful with it. It's very volatile. It's been a while since I've been on your channel. Hope you're doing well. Yeah, all's good, man. Speculative bet. Yeah. Yeah, you could try your, just manage your risk on it. Don't go in too heavy. Don't go in too heavy because semiconductors right now are getting killed. What about SLB Schlumberger long term? Schlumberger. I don't know what it is. The company itself, it does look okay. Longer term, it's not doing great. All right, so if we look at it from the perspective of 3-year highs or whatever, it does look like you do have a longer form of consolidation here on the weekly. But I don't think I would want it unless it got down to around $44. This is going to be that support area. And this is going to be your resistance area. So you're pretty much lower in that range. So one could watch your weekly supply zone there if that's what you're watching, if that's what you're keeping an eye on. If you close tomorrow below that, I wouldn't look for entries again until 46.54, which brings this candle into play. And that gives you a liquidation on that swing low as well. This swing low right here. So if you close a weekly under 48.85, I would leave it alone until we get that, spike under 48.69 and then potentially look to buy it upon resumption of that level. But this is a pretty vicious 3 weeks. It does look like it's definitely trying to hold support there. 1, 2, 3 tags of it. So, I mean, just keep your eyes on it. That's a weekly level. Tomorrow's the last day of the week. So tomorrow's close will be important for it. Don't go in heavy. If you go in light, then you can add lower. If it does look like they make money. They don't miss on earnings very often. I mean, I'm looking back all the way to 2022, and it looks like they do good. They're a dividend-paying company. It's obviously cheaper than it was back in its heyday. All-time highs are around $118. Maybe. I mean, there might be a slight trend up, but that's probably what you're looking at right there. There is a little bit of confluence there. I would keep an eye on 48.69, as that is going to be your weekly supply zone, and you do have ascending trendline support coming in as well there. It takes 3 touches to make a trend. You've only touched it twice. Obviously, if you lose this trend line, your trend is done. Not necessarily either, though, right? Because we can't see in the future. It could drop down here and then go back up. I don't know what it is. I've never traded it before, but just keep an eye on those levels. 48.69 and 46.59. Do they offer options? I don't know if I'm looking for a long-term hold, I'm definitely not going to use options because options are volatile and you just lose money no matter what. That's funny, it's not showing me any earnings on the options chain, but they do have weeklies. It's pretty spready. Got a 30-cent spread on the options chain 30 days out. Yeah, just go in light and, would I buy it right here, right now? Probably not. I would probably wait till the end of the day to see how it fares. Because the majority of the selling is I mean, it just had earnings. Very small beat. It's coming into that area right now. So I would watch it on the close today. As long as it's above that, then maybe you can take a shot at it. If you go in light, you can definitely pick up a few shares of it. And then if it continues to go down, you can pick up a few more. Ultimately, it doesn't look terrible. Wheat is the ticker. Well, yeah, but it's not like, you can't trade this, can you? I guess you can. Yeah, it looks exactly the same as the actual futures contracts that we looked at. So, I mean, I can see why you're looking at it. I mean, it's very cheap. It's because it's an ETV. It's not even an ETF, but they have weeklies as well. Huge spreads on it. Huge spreads on it. Now, this would be you would just have to buy the underlying. But like I said, it's getting. I mean, you're getting a spike here, so it does have, like I said, double bottom properties to it. But no, it doesn't. So the ETF doesn't even look as good, or the ETV doesn't even look as good as the other chart, which is the actual futures contracts. This must be some kind of leveraged fund or something. Because it just goes down. You know how I feel about things that only go down, right? I generally don't like them. The best assets to invest in are the ones that go from bottom left to top right, not top left to bottom right. Those are generally the ones to avoid. I'd say you're just getting a bounce because you're at a huge support level. But these things trade differently because they're settled differently. I would have to do my research on this. But yeah, I don't like it. It's overbought. So, I mean, the opportunity's already been gone, and I can't even find an opportunity. I can't even find where I would be interested in it at all. I would be more interested in selling it, but seeing how it barely moves. I mean, this is a huge move on the actual futures contract, and it's literally less than $1 move on that. So very slow mover, very easy to protect your risk on it. And it freaking stopped at daily res. The high of that candle is 582 to the cent. It tagged daily res and rejected. But that's only a 4-cent move, 5-cent move. Even if you nailed daily res today, you didn't do very good. Unless you had, like, I don't know, 100,000 shares of it. Yeah, I think I would leave this alone. All right. If that's it, I guess we'll wrap it up. I want to try to keep these things under 2 hours if possible. Not a lot of other questions out there. Bitcoin is looking like it's trying to rebound a little bit on the daily range. You got some intraday support here from a while back. There's 4-hour support right there. I wouldn't consider this a supply candle, even though it is. It's just I don't like the long ranges to be supply. I like the smaller candles for that. But it is ultimately an old resistance level. So you could play it based on that. You don't even have to play it based on this candle at all. You just play it based off that. So there is a little bit of support in here. Intraday support. There's no daily support anywhere close by. There's old support there. Who knows? Who knows? We'll keep an eye on it. See if it makes a lower close today, or does it close as an update? If it closes as an update, we might be able to take a shot on Bitcoin to the upside tomorrow. I mean, it doesn't look like a buy on the daily time frame. It definitely doesn't look like a buy, but if it holds that area, it could be. I think I'd keep an eye on the 4-hour candles here. And a close under 63,550, I would just chalk it. It did completely retrace that hourly move, though. Right back up to hourly res. If the S&P 500 rolls back over, then this will probably do it as well. One could take an intraday short on it if you think it's going to break down at that hourly res, but just keep your wrist tight. This isn't even a high of day here, so be careful. Be careful, baby. It's still stuck in that range, and it makes it difficult to look for downside trades this far down. But it's under the 50, so that means it's going to have lost a lot of moving averages here. You got your 100 coming in around 60 grand. Where is the weekly? Oh my God, it's still way down there. You can see the bears are definitely struggling to push this thing lower. They want it lower, but they are freaking struggling. So that could indicate a little bit of buying pressure, but your weekly candles have made lower. The last 4 weeks have closed lower. Well, the last 3, right? No, the last 4, because you closed there, then you closed lower, then another lower close, then another lower close. And as of right now, you're still lower. Bitcoin hasn't even moved at all this week. That's funny. Not really. But it's at the bottom edge of the range, so I would assume there's probably a lot of people buying it. Welcome to retail level 1, Michael Massey. Thank you for that, my friend. I appreciate you. I just subscribed to your channel. I was wondering if we could have a conversation on the phone or maybe via text message. I don't give out my phone number. I do have a Discord, but it is hidden behind a paywall. You can ask me questions like, look me up on Twitter. My Twitter is right here. It's at trade_talk_, all caps. At trade_talk_, and just hit me up there and we can talk. You should be able to DM me there. If you can't DM me there, then just leave a comment on this video so that way I can find a different way to get you get whatever information you're looking for. But yeah, Twitter's a good way to get a hold of me. All right. But like I said, if you can't for some reason DM me, which you should be able to, because everybody does that I don't even know, you should be able to. Just DM me over on Twitter. Let me know that you're Michael Massey, and we can take the conversation there. All right. All right. So we're gonna wrap it up right there, guys. Yeah, I mean, the S&P is recovering a little bit, which is, normal. There is a daily supply zone there. That's why I took profits right there, pretty much, because these levels can hold some weight. And if the S&P 500 is done rolling over, like if this was the extent of the pullback, then why not, buyers showing up here? I can see it very much so. The 100 exponential on a daily time frame, yeah, people will buy it there. What do we got on the exponentials on the weeklies? Ooh, weekly 21. So yeah. Did we test the weekly open today? No. Did not test the weekly open. This is the weekly open right there. We did not test it. So this could still struggle a little bit. This could just be, a pretty good size pop, because this is where we were trading before the news came out. So that could be an entire daily range move there. You could be choppy for the rest of the day. And in terms of like, where are we in as far as the expected move? Yeah, people are they're buying it up based on that daily supply level. That Friday close there. Let's see if it's able to close above that today. If it is, then we may be selling puts on this bad boy tomorrow. All right. Oh, you don't have a Twitter. Let me see if I can download. You don't have to download it. it's a web, it's just a platform like any other. I don't have any other social networks like Discord, YouTube, and Twitter are all I have. I don't have Instagram, Facebook, none of that stuff. But yeah, I'll definitely help you out. All right. All right. Well, let's wrap it up. Thank you guys for being here. As always, I appreciate your time. If you have any questions or comments or anything, drop them down in the comment section, as I always respond to every single one of them. Thank you once again. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.